How's everyone doing? This is Rob with Horizontal Land Partners, HLP, and this is for our Gulf Coast Equity Fund. Today we're going to be covering a lot of the fastest moving segment of housing right now, and actually the markets that they serve. So after Hines sold Starwood Capital $800 million worth of master plan communities, which are just land with utilities put in that are entitled, I started to look at Texas a lot further. We spent 3 to 4 months trying to get 500 to 700 acre sites, trying to do data centers here in Florida. Florida has a lot of issues when it comes to why you might not invest, and it's amazing to see a company take a $1 billion investment, just under that, $800 million. And when you see that, and I talked to them, I called their team, I called their land group, they have an office in Tampa, and I said, hey, what else are you guys doing in Florida? And they say, nothing, right? So that got me looking a little bit further into Texas. The tough thing about Florida is that the jobs are a little bit slower. They're not like, the economics here are a lot less important. Where I'm from in Ohio, Columbus, Ohio, there was a group called Jobs Ohio that brought manufacturing. And I incorporated a company called Jobs Florida to try to do the same thing. We worked for months all over the state. We're fighting cities. We're fighting, just there's politics. We're in a regulated energy market. It's one of the toughest markets to do business in, I would say. And you see other people doing the same thing. So after we tried 4 or 5 deals and losing probably $25,000 across all of the entitlements, I decided, you know what, we're just going to try to look at Texas a little bit further. So one of the big ones, we still like Florida, the north on I-10. There's some amazing cities near Tallahassee and Lake City where there's big manufacturing plants for mobile homes. It's a totally different area than Miami or Cape Coral, but there's not a lot of jobs in Florida like there are in Houston, Texas, or Dallas, Texas. So we're going to talk a little bit more about the manufactured housing market here. This is an article by Construction Coverage written just a few weeks ago. U.S. states investing most in manufactured housing. Now, these are the types of people that I would recommend you guys get in touch with. It says this is the most recent release of our study. To see it, see below. After years of real estate prices and rents, housing affordability crisis in the U.S. is more than apparent. Policymakers, economic experts, and everyday households continue to search for solutions to ease financial burden of securing housing. One option gaining renewed attention is manufactured housing. Now, if you look at the boom of manufactured housing, there was upwards of, the biggest ones came in the 90s, over 300,000 mobile homes were produced. And if you look at factories, factory investments are directly proportional to housing, mobile home housing supply. So if you build a factory, there's a factory where I was built in Columbus, Ohio. One of the gentlemen was in development for a long time doing high rise. He went from brokerage to development to manufactured housing, and he's building them in communities like Springfield, Ohio, Dayton, Ohio, and he has a 3-year wait list. And from going to a couple alt conferences as well that I've seen around the nation, in LA, in Texas, and here in Miami, there's amazing ones every year in New York. It is undeniable that that's a big portion of it. Even Elon Musk lives in a mobile home when he goes down to Starbase. So the manufacturing market took a massive consolidation, and there's very little manufacturers left. There's 3 suppliers that control the majority of the market, but just a little bit of commentary there. Manufactured housing includes homes that are prefabricated in a factory. Now, they used to be called mobile homes. After the 70s and 80s, they started to call manufactured housing. And there's a new hybrid called, it's what Clayton Homes does, which allows them to really grow because of traditional financing. They can get Fannie and Freddie loans. So it's concrete foundations and, assembled, two home assembled on site very, very quickly. They can get those under $200,000, and they still ship them out of Tennessee, which is insane. I've talked to Clayton Homes has some of the best land development groups and actually main guys that really deserve twice their pay. But what it says here is that according to the Manufactured Housing Institute, the average price is $87 a square foot. half of the 166 per square foot of traditional site-built homes. Now, what is the difference? The difference is locations, I would say, utilities, and development standards. A stick-built home has much higher regulations than a mobile home. And traditionally, mobile homes are built in unincorporated areas, whereas city building codes are going to be much stricter. And therefore, that's one of the big ones. Land costs, access of city water taps, so shared utility taps on a master policy it means the tap fees are significantly less. We build 6 or 8 houses at a time in Columbus, Ohio. I still do with my partners, and that's one of the big reasons. We really want to focus at Horizontal Land Partners and HLP Fund. You know, our trade names for Midwest Residential Growth Fund 1, or the Gulf Coast Equity Fund. These are all our trade names. We really want to focus on this segment of the market, including, if it was up to me, I'd love to take the $50 million we raise in equity and build a factory, because factories can produce substantial amounts and traditionally pay themselves back. If you look at Clayton's newest facility, I will open this up really quick. Clayton Homes' new facility, I think it's in Arkansas. I think it's $30 or $40 million investment right here, 250 jobs, and the capacity, 3,000 homes, which means 3,000 homes this is in, it would be in Clayton and Conway, Arkansas. Ironically, we're looking at Conway, Houston, near Houston, Texas, which is amazing. There's Arkansas. Now, 3,000 homes at even $60,000 a piece. I'll just show you the math. 3,000 on 60,000 is 180 million. Where can you build a factory and have a capacity at $180 million? So once I read some of those press releases, that got me looking a little further into some of this. Here's some of the key findings. Manufactured home production is rebounding. After falling sharply in 2023, shipments of manufactured homes increased to 103,000 units in 2024. As of mid-2025, annual shipments climbed to 106,000. The average manufactured home is 123,000. While the median single family is 367. So one of the big advantages of Clayton Homes compared to its other groups, and it's really just competing with itself. No one else is competing with Clayton Homes. They own 9 home building groups, and most of them are under the price of $250,000. We did really deep dives into all the new builds, thousands and thousands of transaction pulls from 10 plus years, probably 1 million data pulls in Ohio, where I'm from, before we even built housing. And what we saw was very similar stats, that the highest velocity came at the lowest price. And companies like D.R. Horton have homes sitting because they don't know the market. They don't have land groups up there. 4-star is absolutely garbage when it comes to what they're doing. They might be doing two at a time. And a lot of the other groups aren't from Ohio either. No one really has a deep knowledge of Ohio and the market that it serves, which it's very similar to the Gulf Coast in terms of economics, which make it really competitive. The South leads in manufacturing. So it's 66% less for manufactured homes compared to though it excludes land value. So if you own a park and you can put one of these there, it doesn't cost a lot to keep a home there. They just pay lot rent. So you just add it on. Depending on mortgages, and every group's going to be different, but I think it's important to be vertically integrated. To own a lot of Ryan Homes is vertically integrated, and they never touch the land. They are capital light. They work with land groups that buy the land. They use options and pre-funded contracts, and that's how the industry is shifting. It's a capital light model. The South leads in manufactured housing investment. Southern states like Texas, Florida, and North Carolina had the highest total shipments, while states like Mississippi, Kentucky, and Louisiana had the highest share of manufactured homes among new single-family housing, often reflecting lower income levels and affordability needs. This is what we're saying. If you make $30K a year, you can still afford a trailer. Unfortunately, that's the position of some, but if you talk to the people in the working class, they're okay living there. It's a part of the segment, and you don't own the homes, really. Most of the suppliers, there really isn't a massive consolidation of this, but as someone that's building a lot of these homes, I could tell you that we absolutely had the highest velocity at the lowest prices on the 500 transactions that I did over the last 10 years. How many manufactured homes are built in the U.S. each year? This says factory shipped 103,000 homes in 2024. You can see how it's been climbing since 2010 at a very steady rate. This is going to be, it's still very, very reflective of interest rates as well in mortgages, but a lot of the best firms like Clayton have their own mortgage companies, and so do the Vanderbilt mortgage, right? There's a lot of Vanderbilt. We were looking at installing mobile homes on $10,000 lots. I always buy bad land deals once in a while. Things happen, and we try to get out of them by putting manufactured housing there. And Vanderbilt was another really big one where we were from that did the whole thing. Very easy to get these financed because they're vertically integrated. So as a fund, as an equity fund, a secondary market here is just carrying the debt on these and putting them in the parks that you own as well. There's mobile home parks in Florida as big as 5,000 homes. And Texas is pretty lenient when it comes to the statutes because they don't get as many hurricanes like Florida does, even though 1 in 10 people in Florida live in a mobile home. Manufactured housing, home production in the U.S. has experienced significant fluctuations, reflecting broader economic conditions. After falling sharply in the early months of COVID, shipments bounded in, peaking at annual rates 122,000 in March 2022, twofold increase. However, that momentum was short-lived as inflation and mortgage interest rates climbed to the highest in 2022 and 2023. Demand for housing softened. Now, what you would see is, I think if the mobile home industry did the same incentives, the margins are thinner, right? But if they did the same incentives, or if they pushed rent to own or owner finance deals or anything like that, you would still, that might be shipments, but it doesn't necessarily mean efficiencies, right? There's a lot of fancy ways that finance guys can create new financial products that can help these be moved. So if you're vertically integrated, you're not really reliant on the source. When I talk to Champion Homes about big deals and running workforce housing, they were very open to it, but they wouldn't build a new factory. We were trying to push manufacturing because that's what these counties want to see is new manufacturing facilities. If you also look at Champion Homes high rise, they are building stacked high rises, I believe now. We already talked to them. Modular, New York. New York's already seen this type of construction. Mid-rise. Where they're assembled. Modular, you can find Champion Homes. New York City high-rise modular. There's been several of these. 32-story high-rise Pacific Park. There's a bunch of them. Did 416, the world's tallest modular building. And full stack modular. This is like a lot of the new types of hybrids where obviously you can see that's not going to be seen as a mobile home. So owning the factory and independent assemblies is really where the future's at, especially for apartment communities, for workforce housing communities, for seasonal, for trailers that are temporarily permitted. We're seeing a lot of those. So this means that it says mirrored a steep drop in traditional site-built housing starts, which is what you would see here. You see these almost go in line with a lot of the times the types. This is private and public funding, but these are very in line, residential, non-residential. They're almost identical to the types of trends that you see there. So recent data suggests the manufactured housing market is stabilizing and even recovering faster than broad housing sectors. Factory shipped 103,000 in 2024. Rebounds, manufacturer versus site-built costs. You can see here that prices of manufactured homes are pretty stable compared to the massive increase in the supply side demand, which means, Wall Street loves stability. And if you look at these two charts, this is going to be price growth. You can see that while the pricing matched, but the prices to produce them did not. Comparison to manufactured and site-built housing costs showing total ownership costs and average price per square foot. The average sale price of manufactured was $123,000, while the median was $367,000. Now, one decreases in value, one increases in value, right? So as you do this, I think taking a hedge in a manufacturing facility is a much stronger bet than buying mobile homes. Let the consumers buy them and lose money on them, just like regular homes. or just like cars. While manufactured homes continue to offer a low cost, rising demand has pushed prices higher in both segments. Okay. And then you see the total. So the percentage, if you look at the concentrations, if you look at Texas, and we'll get into this because there's a massive report. We're going to go all the way across these. Manufactured houses varied in population across the U.S., but the South stands out for its affinity for manufactured homes. Texas has 18,000 shipments, number one. Florida has 7,000. North Carolina has 6,700. They lead the nation by population, pressures, and favorable regulatory. I would argue on that in Florida. There's been a lot of pushback on that. Look at Hawaii, you can see. So where I'm from in Ohio, let's see where that's at. Ohio's not even in the top, but you can see some Midwest ones too. Indiana is really reflective. A lot of the Gulf Coast that we're talking about, Texas is here, Florida's here, Alabama's here, Louisiana, and then Georgia's right here as well, Tennessee and Mississippi. Those are all the states that we focus on, and you can see they're all in the top 15 states for new manufactured shipments. So if you study the market here, you know, if someone comes in, you can't get any lower than the cost of a mobile home. You know, no one's going to compete with us. And where I'm from in Ohio, there's only 8 builders that can get under 300,000. In Florida, there's about 26 builders that can do that. We've already looked at all of those. So the bottom states here, you can see states with the highest percentage. Mississippi, which is on our list of target markets. Jackson, Mississippi in particular, metros. You can see Louisiana here. West Virginia, obviously, right near us in Ohio. 1 and 4. Mississippi, it's 1 and 3. Louisiana, it's 1 and 3 almost. Which means you're just, in Arkansas, it's a lot less. So the investment over here for that plant, I would say it's a lot worse investment. You have the full release year in the states here. So I don't need to make all these new charts, but you can see Mississippi. Single family's 180, manufactured home 121. Every single state this beats. There's nothing that beats manufactured housing on any segment on any of the top 50 states. Not one. Not even close. And so in Texas, let's pull Texas up since that's one of our target here. Here's Ohio. As a percentage, Texas is probably nothing because there's so much business down there. 122,000 compared to 313,000. Site built permits, 158,000. Okay. We're going to move on in here into housing facts. This talks a little bit about the $31 billion economic contribution, 146 home building facilities, 34 corporations, 112,000 homes produced in 2022. 43,000 land lease communities. That's what most people, I would say, and most of the REITs are covering. 8.2 million manufactured homes. 21 million is 11% of new single-family homes. 34% appreciation over 5-year median home value increase. Appeal of manufactured. 71% are satisfied with their homes, mostly due to affordability and ownership. So people want something that's affordable and they want to own it. They also feel like they're independent. My aunt's from Buffalo. My uncle passed away and she moved into a mobile home park in Florida and she's been there for 20 years. She's very happy. Site-built homes are attainable homeownership are $413,000 across the board, $164 a square foot. Manufactured, $127,000 and $84 a square foot. A single wide is $86,000, which is the fastest growing segment of mobile homes. If you look at the manufactured housing, you can see the manufacturing facilities are right in here. So we're targeting the Gulf Coast around here, Louisiana, Mississippi, Alabama, Georgia, Florida, Texas, a little bit of Tennessee potentially. That one was built in Arkansas, but you can see where these are built. So a lot of it's exploding right here, but even in Texas, you can see how many there are because the demand's so great there. 26 facilities. The manufactured home industry, it says 112,000 in 2022, approximately 11% of new single-family home starts. So they're rolling this in with single families. The average sale price was 127,000 without land. 31% of new manufactured homes were placed in manufactured home and land lease communities. All aspects of construction are continually inspected by professionally trained third-party inspectors. Oh, Texas's industry is extremely easy to get licensed. Florida's a lot stricter because of hurricanes. You could get a license in 8 weeks in Florida. I could design a home and have it approved in my head in probably 8 weeks. The building materials are the same as those in site-built homes. That's definitely not true. The homes are engineered for wind safety and engineering efficiencies. Some of these are true, but not all of them. I think when it comes down to it, the quality materials, if you walk through a mobile home, are never going to be the same. We build houses, and I can tell you 100%, they are not the same as mobile homes. This is not what mobile homes look like. The need for quality, this isn't a mobile home. You know, that's an attached, permanently set foundation. That's a house. The need for quality, affordable housing has never been greater. Today's manufactured homes can deliver outstanding quality, up to 50% less price per square foot. So how do you enter that market? You own a facility, right? You own the facility and you get concrete crews. You do it just like Ryan Homes. Ryan Homes does not touch land. They don't touch concrete. They don't touch site prep. They don't touch regulatory meetings. They just buy and they tie up. They have one of the highest, they have the fastest turns of any public home builder because of the same thing. Let's take a look at the market here. You could see the price has gone up every single year. Wow, what a surprise, since 2014. The average sale price is above 108,000 now. The average price per square foot, the average square feet is almost identical, 1,400. Now we build in this in a stick build, but we found that people that want stick built homes actually want a little bit bigger. So this part of the market is very interesting. That's in our market in Ohio. It's very different depending on where you go. But we can't just build manufactured. There's a plenty of people that can drop, but the problem is that they don't have the flexibility or the design standards to be able to fit on the lot sizes that you want. So that's why it's important to come up with a standardized product, which is a single wide, because it's easy to ship. The easiest to ship. One product. If I could sell one thing, what is it? Just like McDonald's. The percent new single family homes, housing starts versus mobile home shipments. This says, you can see it's pretty stable at 10%. New single family homes, it talks about stick built, shipments, it talks about Connecticut. Single wides, it shows East Central. This is all the breakouts, so you guys can find all these detailed reports if you want. This is a lot of the individual ones. Cavalier Home Builders in Addison. This is Alabama. You could see Champion Homes has several in Texas, Indiana, Pennsylvania. This is one of the best. And who we have relationships with and who we were trying to get. Lake City's the big one. That's at the intersection of I-10 and I-75. Super convenient. And we were trying to get them to build other ones, but they won't. So why give other people the business and let them make 20% margin when you can just do it yourself, right? You have Clayton Homes, which obviously you can see how many they have. Clayton Tiny Homes, they have different brands here. Colony Direct. You know, we're just looking for the big ones. Fleetwood Inc., you can see they have out in Texas. Elliott Manufactured Homes. So this is where we want to enter the market as an equity fund. And remember, if it was up to me, I would make the decisions, but it's not. It's up to a committee. So, you know, that's kind of the look at it. I would never put one in California. I have no idea why someone would do that. Palm Harbor Homes, maybe because of the price differences, but you have to look at what's working. You have Skyline Homes right here, 3 different factories out here, one in Ohio, and then you have Skyline across the board. So you have all of these. And here you have the plant counts by state. Alabama 19, California 8, Texas 10, Florida 10, Georgia 9, and then you're going to see Texas right here at 27, 150 plants. So this is where it really gets to the best. Texas is so mature of a manufactured housing. They have housing reports for manufacturers every single month, and we pulled September's report, and it looks amazing. July's preliminary data, it talks about new manufactured homes in July, titled to date, started out with a bang, moving up seasonally just at 25% from the previous month, and are up 43% over July of 2024. Boosted by enforcement regulations on deadlines and clarification that the date of sale should be later. This shows the shipments, singles, and multis. It shows the change. It shows the volume, right? And it then shows a little bit of the commentary. New home sales in June it's going to talk a little bit about June, and then we're going to go by counties. Top 10 counties for new installs. Montgomery, Liberty, and Harris are the top three. This is for 1 month, right? So that's 33 times 600,000 times, let's just say 80,000 on an average, is 2.6 million a month just from mobile home sales. And that's like you assemble them and then deliver them. So people love their homes. They want to get them. I used to be a demolition contractor. We used to work. And when someone's home burns down, they just want another. It's true. Unfortunately it happens. But, I don't know why you would go from a mobile home to a single family home. So we've seen the same trends. You see Montgomery County, Liberty, Harris, Bexar. Now, where are those? I'm going to pull you guys over to a map here. And we're going to go side by side, which is Montgomery so this is Houston down here. Montgomery is right here. Liberty and Harris. This is Galveston. This is the energy markets. Brown. This is a lot of the counties right here. But this is where all the jobs are along this. Like you got Harris County in here too, but those three counties, you got Bexar in here too, and you can see how these are expanding or growing. Hidalgo, so you see they show the total shipments, and then June, and then it talks about annual sales are now up 4% for all retail side. Multi-sections are up 10% and past 5,000. Most new placements are in Bastrop, Caldwell, Torrent, Lubbock. And the biggest declines are Harris, Fannin, and Brazoria, and Montgomery, but they're still leading. So you have to look at that with what you think it's worth. You see Liberty, Harris, Montgomery. This is the year to date. Even though they're down a little bit, you could see where it's growing, right? Tarrant and Bastrop counties, Bexar's in the top, Ector, Midland, Smith, right? You could see where these are, and you could plot those. We didn't do that deep of a dive, but Liberty, Harris, Montgomery, top three, and you can see the concentrations. Liberty, where is it? Liberty, Harris, Montgomery. Now, if you map that out to, I think it's called Conway, Texas. Let's take a look. Oh, it's just north of Houston. This is where Conroe. So this is one of the places we were looking at. If I was to build a factory, or if we were to go deep into it, because it has access to a lot of the growing markets, and it's all about shipments. You could see there's barely any plants too. So another market we've looked at is down here in Beaumont. But I think it's better to be along I-10. So you can see Beaumont has great distributions for trucking and across the board, right? Easy access to a lot of you could see like how much those other homes made up for Mississippi and Arkansas. So if I was to pick another location, it would probably be somewhere with distribution to all three states, right? Like Shreveport or Jackson, Mississippi, you could see with distributions. But at least for Texas, which is where, it's really driven by the state. So if you want to do, San Antonio's doing a lot too. So you could also target something in between here. And I think also distribution to Austin. So you could look at an area like Columbus right here, Columbus, Texas, and that would give you distribution to all three markets in the majority of the top 10 counties that you can see there. So depending on where you feel comfortable with it, shipments are going to be your biggest competitive advantage. So if you put a factory in where it's growing a lot, those aren't going to change much, and they're still in the top three at all times. It gives you an extreme competitive advantage compared to some of your peers. You got used sale in here, and then you see new sales every month, 400 every single month for singles, and about 500 for that. So just unbelievable for monthly sales. This is like, there's no data for that yet, but this talks about the new mobile home cumulative sales in Texas. You can see how steady and stable this is across the board, across the years. You can see all the way back to 2016, and how even in the top here, like you can see the breakout bands. You can see all the charts at the top. The chart tracks the differences between shipments, 12-month moving averages, median age of new mobile home Texas retail sales. So there's probably more information than you would ever want to know about mobile homes, and they have it all the way back until 2012. So the association, the sources for this are the Texas Manufactured Housing Market Report by Rob Riperda. I'm sorry if I butchered his last name. And he works for the Manufacturing Association. So as far as tells damages, let's see here. Anyways, so either way, I think that one of the focus was a lot about on the manufactured home communities, and also a big part of 10% of the market is manufactured housing in the Gulf Coast, and it's a big segment that is really important for at least what we want to do in Texas. And after seeing like Hines transaction with Starwood, $11 master plan communities. Let's see how much they paid per lot. Yeah, portfolio master planned, and it was in Dallas, Houston, and Austin. 600 acres of commercial land. It said Creekside, Brookwater, Creekhaven, and Wild Rye. This transaction, the deep investment appetite for well-located master plan communities that deliver much-needed housing to high-growth markets and capitalizing on tailwinds in the living sector. Single-family housing in the living sector generally is a high-conviction investment theme for Hines globally. We are delighted with the success of this deal, which enables us to continue to build our market-leading living portfolio across the world. High-quality portfolio created by a first-class investment manager and developer. We plan to build upon the excellent work Hines has completed. We look forward to engaging with home builders to expand the community. So they're a land group first. I wouldn't even say Starwood's that far ahead or really leading the pack when it comes to development nationwide. Absolutely behind the scenes. You know, they're just a capital arm. They're not like Four Star or other land groups, and Four Star is barely even competitive where I'm from. So to acquire a large portfolio of major infrastructure and mature communities. Additionally involved Trez Capital, who is a partner on 9 of the communities, Caraval Ventures, Bloomfield Homes, Sumitomo Forestry America, Esteen USA, and G. McCivil. Exceptional. Hines is a leading global real estate. Starwood is a private investment firm with a core focus on global real estate. 16 offices. They have one in Miami. Over 80 billion of capital, 115 billion of assets under management. Commingled opportunity funds in Starwood Real Estate Income Trust. A non-listed REIT and firm, which is what we want to roll up into, but this is our first sponsorship. So has invested in virtually every category of real estate. They definitely have, and they got hosed on some, and some have been good. So you got some of the other affiliated entities and plenty of experience. So that is a little bit about Houston, about Texas. Again, we'll look at the Gulf Coast here one more time. A lot of these we're looking down here in Cameron, Texas as well because of its location to Starbase, and there's a town right in here that's called Brownsville that we're looking at housing in. So the Gulf Coast is our focus. Gulf Coast Equity Fund, Horizontal Land Partners, HLP, Midwest Residential Growth Fund 1. You know, I started looking at the Midwest, and we called all the big players, the biggest affordable housing developers, even in Kentucky, in Wisconsin, in Florida. I couldn't get anybody to come to Ohio after we made the investment thesis. So we just rebranded as a DBA for Horizontal Land Partners, and I pushed land deals for the last 6 months. We're extremely patient. We've looked at a ton of deals. There needs to be a lot of upside. We use options as a way to control, just like Ryan Holmes. And we looked at deals in Central Florida. We looked at deals in North Florida. We looked at deals in Southwest Florida. But you just don't see the economic throughput like Texas has. And net migrations prove it. Texas has surpassed Florida in terms of net migrations, jobs, energy, everything else. So it's one of the best economies. I wish Florida would listen up and study a little, but unfortunately, you know, you got all these big players that just don't do anything, and we're in a pretty controlled state by, they're great economies. I love Florida, but that's not it. So thanks for watching, everybody. I hope you enjoyed the video. Again, my name is Rob Ellis. If you want to learn more about our fund, this is our investment thesis: America's working class, the world's most stable asset class, institutional capital light housing, and essential land across the Southeast and Gulf Coast, the last major corridor where it's still cheaper to own than rent. And we've looked at a lot of these, the investment thesis. You can go on here. You can see we've ranked our markets. You can see the allocation: single family housing clusters, manufacturer and modular housing communities, historical REIT performance, limited new supply creates durable rent growth. We showed you the stats in this one. Real asset infrastructure: truck parking, solar PPAs, ground leases, billboards, tower pads, rail, and infrastructure, right? So this is the Gulf Coast Equity Fund. These are the types that we're looking at. And working class demand and stability, it talks about all the debt limits, the target portfolio value for this fund, the target raise, which is $50 million. We also did a press release yesterday, HLP fund. If you look here, you can read we made our Crunchbase profile, Gulf Coast Equity Fund. And this is it, which is a similar press release to what we had, but Midwest Residential Growth one, and then the launch of a Gulf Coast Equity Fund, a $50 million private vehicle targeting Tier 1 and Tier 2 metros across the Gulf Coast and Southeast, emphasizes capital light housing, single-family rental clusters, modular manufacturer partnerships, and infrastructure joint ventures, underwritten against public REIT and home builder benchmarks. Following multi-year inbound migration to Texas, Florida, Tennessee, and the Carolinas, HLP's thesis focuses on submarkets where institutional operators report high occupancy. Committee oversight, flood wind screening, leverage caps. That's right. Institutional grade fundamentals, migration, affordability, and high occupancy at a fraction of the basis seen in primary metros. You could see some of the New York firms, like we covered one on Kushner. I think Kushner Co's. And these are Kushner Co's. If you just look at they got hosed in New York, and they had to diversify. They've invested in Miami and Tier 1 markets, and they've also invested in Tier 2 markets. And they bought this from a Midwest MAA right here, a publicly traded REIT, and of Newmark. So as you start to look at a lot of these, our goal isn't to sell. I'd like to operate and own all these forever. That'd be great. And push up and roll them into a REIT. But you have to have a couple funds to do that. So that is a little bit about our fund. Thank you for watching, everyone. I hope you enjoyed the video.